The key theme for this month's Macro Deck is learning from the Asia-Pacific experience. As the world slowly emerges from the worst pandemic since 1918, some questions we heard frequently from our investors are: will people return to cities? What can we learn from the Asia-Pacific experience? There are certainly differences in cultures, core beliefs, cognitive biases, and past experiences in each country. All of these differences influence employers, employees, and consumer decisions in returning to their offices or spending time in malls or even going to movie theaters. In Asia Pacific, the high level of trust that domestic populations place in most Asia Pacific governments has played an important role in reducing the health risk. The high level of trust has allowed Asia-Pacific countries to move from phase 1, which was lockdown, to phase 2, partial reopening, or, in other words, living with COVID. In phase 2, behavioral influences play a big role in the progress of reopening in many Asian-Pacific cities. It certainly helps that mask wearing does not carry a political message.
The Asian experience shows the world that recency bias can be overcome, but only through confidence-building actions and communications taken by governments and businesses. Asia-Pacific's leading position in controlling the pandemic is evident in various mobility indices as shown in the deck. Rising mobility is a sign of rising confidence that builds into a virtuous cycle. In Shanghai, where the pandemic is under control and economic reopening has been the most advanced globally, we have seen office demand turn positive in the second quarter of 2020. In Singapore, a favorable domestic pandemic situation has seen office demand turn positive in the fourth quarter of 2020, in spite of the economy suffering its worst decline since 1965 and the government's policy of capping office capacity at 50%. Even in the retail sector, which was the hardest by the pandemic, occupier demand in Shanghai was positive in 2020. Chinese consumers gradually returned to malls when the health fees largely declined in April. Behavioral influence are also evidenced in investment decisions. The 2020 Institutional Real Estate Allocation Survey by Cornell University and Holtz White and Associates shows that in 2021, institutional investors plan to increase their real estate allocation the most in Asia Pacific. We have already seen a strong start to 2021 fundraising for Asia Pacific strategies. Capital raised year-to-date 2021 is matching the same levels seen in Q1 2019, pre-pandemic levels. All these observations are profoundly affected by behavioral influence.
As we look forward to phase 3, the new normal, each country has a different vaccination rollout schedule. It could take some time for herd immunity to be achieved. The rollout of COVID-19 vaccines will first help to restore domestic activities, particularly in countries that mismanaged the initial pandemic response in 2020. This is only the first step to repair their domestic economies. Ultimately, for the global economy to reach the new normal, the majority of the world population will need to be vaccinated. In the meantime, economic and real estate recovery in most countries will rely more heavily on domestic demand. The experience of major cities in Asia Pacific shows us that a return to cities is not only possible but probable when both the behavioral and the biological effects of COVID-19 are tamed.